The government just passed the One Big Beautiful Bill Act. And the tax changes hitting in 2026 are more significant than you might think. While the headlines are focused on a couple of things, some of the most important changes that will directly impact your finances are buried in the fine print. Honestly, a lot of people are probably going to overpay in 2026 just because they don't know what's coming. Look, sweeping tax changes are here, and it's completely normal to feel a little lost about what it all means for your bottom line. But you don't have to be. In this video, I'm going to walk you through the biggest changes you absolutely need to know for 2026. We'll cover the key updates to deductions and tax brackets that will affect your paycheck. We have a lot to cover, so let's get right to it. First up is the standard deduction. This is the amount you can automatically subtract from your income if you don't itemize. For 2026, these numbers are getting a nice bump. For married couples filing jointly, the standard deduction is jumping to $32,200. For single filers, it's going up to $16,100. And for heads of household, it's increasing to $24,150. This change means more of your money is protected from taxes right off the bat. But the really big news here is a special, temporary provision for seniors. If you're 65 or older, you might be eligible for an additional $6,000 deduction. Now, this is a huge potential benefit for many retirees, but you have to know the rules. It's only available through 2028, and it starts to phase out if your modified adjusted gross income, or MAGI, is over $75,000 for singles or $150,000 for joint filers. It's also not available if you're married but file separately. Next, and this one is a game changer for homeowners and anyone living in a high-tax state, the state and local tax, or SALT deduction. You probably remember the old rule which capped this at a painful $10,000 per household. Well, under the new act, that cap has been quadrupled, starting with the 2025 tax year and continuing into 2026. The cap on the SALT deduction is now $40,000. This change is temporary and set to last through 2029. But it provides massive relief for those with high state income and property taxes. It's also worth noting that the cap is scheduled to increase by 1% each year through 2029, which is a nice little detail for future planning. Keep in mind, this expanded deduction does begin to phase out for individuals with a modified adjusted gross income over $500,000. Now, let's talk about the tax brackets. The 7 tax rates themselves, ranging from 10% to 37%, are staying the same. But the income levels for each bracket have been adjusted upward for inflation. This is good news for everyone. Why? It means you can earn more money before you get pushed into a higher tax bracket. For 2026, the top tax rate of 37% will apply to single individuals with incomes over $640,600. And married couples filing jointly with incomes over $768,700. These adjustments help ensure that a simple cost of living raise doesn't accidentally trigger a higher tax bill. This next one is for you if you're a freelancer, gig worker, or a small business owner with a pass-through entity like an S-corp or partnership. We're talking about the qualified business income, or QBI deduction. Under the old law, this fantastic 20% deduction was scheduled to disappear after 2025. The huge news is that the One Big Beautiful Bill Act has made the QBI deduction permanent. This provides incredible stability and makes long-term tax planning so much easier for business owners. The law also expanded the phase-out range for joint filers, which means more business owners may be able to take full advantage of this powerful deduction. If you're finding this breakdown helpful, do me a favor and hit that subscribe button with the notification bell turned on. New rules and guidance on this bill are coming out all the time, and you don't want to miss any critical updates. Finally, I have to mention a major shift for businesses that invest in large equipment, the popular 100% bonus depreciation, which let businesses write off the entire cost of new assets in the first year, is being phased out. While some early reports suggested the bill might restore it, the final version of the act confirms the phase-out will continue as planned. For assets placed in service in 2026, the bonus depreciation amount will only be 20%, and after that, it's gone completely. This means businesses will really need to plan their big purchases and capital investments much more carefully over the next few years. So, let's quickly recap the most important takeaways for 2026. First, your standard deduction is going up, which is great. And it's especially helpful for seniors who might get that extra $6,000 deduction if they qualify. Second, the SALT deduction cap is now $40,000 for most people who itemize, which is a massive relief for those in high-tax states. And third, for all you business owners, a 20% QBI deduction is now permanent, giving you some much-needed certainty for the future. Now that you have this crucial information, you're probably thinking about how to best position yourself financially. A great next step is to understand how to plan for these changes. Go ahead and watch this next video on planning for the 2026 tax changes for some actionable strategies. You can also click the link in the description to grab our free tax planning checklist to help you get started.